How's it going, everyone? My name is Dan, but you can call me Malone, and despite what you might think, becoming a millionaire is very doable. Now, that might be hard to believe in a world where we're bombarded with news about rising prices, unaffordable housing, and retirement uncertainty on a near daily basis. Yes, these are very real problems with very real implications. However, when we talk about becoming a millionaire, the conversation should always have a long-term horizon in mind. Financially, we don't necessarily care about what's going on in the world today, so long as we're taking the correct steps to maximize our chances of success in the future. If you've clicked on this video looking for some get-rich-quick nonsense, you're in the wrong place. I totally appreciate it's possible, albeit highly improbable, to become an overnight millionaire by looking out on crypto, NFTs, or financial derivatives. But that kind of luck never comes without taking excessive amounts of risk with money that you likely can't afford to lose. If instead you have your head screwed on and want to hear 7 realistic ways to become a millionaire, then stick around, this one's for you. The one concept I want you to keep in mind throughout the video is infrastructure. Yes, it's possible to become a millionaire using any one of the 7 sources of wealth which we'll discuss. However, in reality, the best way to get there is to use all 7 sources at once, letting each one contribute its own value to your infrastructure. Like any successful infrastructure, it takes time to build. We're slowly building up each of the 7 sources. Hence why the millionaire conversation must always have a long-term horizon in mind. What's more, by having 7 sources of wealth, we're avoiding a position where we become overly reliant on any one single source. Before we jump in, if I could ask that you take just 2 seconds out of your day to leave a like, and if you enjoyed this video and want to see more like it in the future, don't forget to subscribe. Number 1. Practice money mindfulness. I want to start off by talking about your relationship with money, because having a healthy relationship with money is critical to building wealth. In the words of Anton Creel, you need to respect money and be indifferent towards it. In order to respect money, you must first accept that money is a tool. It's a tool which can allow you to achieve certain things provided the tool is used correctly. If the tool is used inefficiently, then its potential is wasted. When you receive your paycheck, you're faced with a choice. You can either A, spend that money on non-value adding items and activities, or B, invest that money in things which will bring you wealth, some of which we'll discuss in this video. By choosing the second option, you're demonstrating your respect for money. Oftentimes, it's what you don't do with money which demonstrates your respect for it. Don't borrow, don't spend what you don't have, and don't spend frivolously. What you'll find from our discussion in this video is that the earlier you start respecting money, the more impactful the results will be. After you have demonstrated your respect for money, you must then be indifferent towards it. Again, money is just a tool which can be used to achieve certain outcomes. By investing your money, say in the stock market, you're trying to achieve an outcome where the value of your money will increase, or you'll be provided with a regular stream of money from your investment. But that won't be possible if you've an emotional attachment to money itself. You see, putting the tool to work is one thing, but letting the tool work is another. It becomes very difficult to build wealth if you're terrified at the prospect of losing money. And constantly looking over your shoulder to see how your investment is performing will only hinder your journey. This is why you must develop an indifference towards money. The process of respecting and becoming indifferent towards money is what I call money mindfulness. Number 2, invest in the stock market. The stock market has returned over 10% each year to investors on average since 1957. If you invested $100 each month into the stock market since 1957, you'd have over $5.8 million today. How exactly did we turn $78,000 into $5.8 million over 65 years? The answer lies in the beauty of compound interest. Compound interest is returns on your returns. Not only is the value of the money you invested increasing, but so too are the increases themselves. If a $1,000 investment grows by 10% in one year, then in the second year, a further growth of 10% will not only be on the initial investment of $1,000, but also on the 10% growth of the first year. Your returns are generating returns. You can see on the graph that in the early years of our investment, not much is happening in terms of growth. But as time goes on, our investment value starts to increase increase exponentially. That's because the effects of compound interest are greatest in the later years of an investment. Therefore, the key ingredient is time. Without a long-term investment horizon, compound interest won't flourish. To become a millionaire in the stock market, you need to start early, you need to be consistent with your investments, you need to scale the size of your investments over time, and you need to be emotionally resilient. So that begs the question, what do you invest in? Because we're talking about 7 realistic ways to become a millionaire, we have to talk about exchange traded funds, aka ETFs. ETFs are used by investors as a way to own hundreds, if not thousands of stocks without having to go out and buy each of those stocks individually. To do so would be very expensive. Instead, you can buy a single share in an ETF at one convenient price and own a small slice of all the different stocks which the ETF itself owns. The reason why ETFs are so effective as millionaire maker investments is because they're diversified, low cost, and highly accessible. We mentioned that the stock market has returned over 10% annually since 1957. Index fund ETFs allow you to invest in the stock market as a whole and to access that annual average return of 10%. Of course, investing in individual stocks has better potential to provide returns which are greater than that of the market as a whole. However, investing in individual stocks requires due diligence, which essentially means you need to research the company in order to find out whether the investment makes sense. The average person does not want to spend their time researching investments, meaning the average person probably shouldn't invest in individual stocks. Plus, we know that the majority of professional investors who actively pick stocks fail to beat the market over the long term. So you need to ask yourself, if the professionals can't do it, how will you? Number 3, don't neglect retirement. Let's talk about retirement accounts. There's lots of misconceptions about retirement accounts and the act of saving for retirement, which are counterproductive to building wealth. For example, the idea that you're too young to save for retirement. You are never too young to save for retirement. The only difference between retirement accounts and online brokerage accounts offered by the likes of Robinhood is that retirement accounts are much more efficient for long-term investing. That's because retirement accounts in virtually every country around the world come with tax benefits. The government really wants you to save and invest for retirement, and in order to encourage you to do that, they provide very attractive tax benefits for putting money into retirement accounts. For example, some countries won't tax the money you put into the account, some countries won't tax the gains and income which your investments earn, and some countries will charge no tax when withdrawing from the account. Clearly, not having to pay tax is massively beneficial to your investment returns. Many employers will also match what you put into your retirement account as an added benefit on top of your salary, so you're literally getting free money by investing. The drawback of retirement accounts is that you generally can't access the value of the account until you reach retirement. But again, the millionaire conversation must always have a long-term horizon in mind. So if you're planning on buying and holding investments for decades, why not do it using a retirement account and get all of the tax benefits as well as free money from your employer as added bonuses? Nowadays, it's becoming easier and easier to invest in virtually anything using a retirement account. So I cannot emphasize enough how important they are. Number 4, real estate. Because we're talking about realistic ways to become a millionaire, I'm not going to focus on direct real estate investing. Reason being, investing in real estate requires a significant amount of capital, which comes from either A, having a large sum of money at your disposal, which most people don't, or B, borrowing a large sum of money, which can be very risky and costly over the long term. Instead, what I want to talk about is real estate investment trusts, better known as REITs. I have a full video on REITs which I highly recommend you check out. But to give you the executive summary, REITs are companies whose business involves owning or financing real estate. Like all other publicly traded companies, shares in REITs are bought and sold on the stock market. REITs allow investors to invest in real estate without having to own and operate the real estate property themselves. The biggest benefit here is cost. Investing in REITs will cost you the price of a single share, whereas investing in real estate property directly will cost you a large down payment as well as a host of other costs like property taxes, legal fees, and insurance. REITs are also extremely easy to buy and sell, but more importantly, they have a bright future. History tells us that REITs perform best in times of high inflation. There has been no shortage of news about inflation and rising prices over the past few months. Global inflation rates remain high, and with the added uncertainty of the conflict in Ukraine, who knows what the economic circumstances will be in the coming months and years. Therefore, it could be wise to add some buy and hold REITs to your portfolio now, not only to take advantage of the current inflationary climate, but also to add some real estate exposure to your infrastructure. REITs are a great source of passive income because they're legally required to pay out dividends to shareholders, meaning if you can find a high quality REIT, you'll find a high quality income stream. Number 5, Web 3.0. I think it would be foolish to make a video about realistic ways to become a millionaire without talking about Web 3.0. To be clear, I currently don't invest in cryptocurrencies, NFTs, or any of the investable products spawned by blockchain technology. I believe in the underlying technology, but the issue is valuation. It's extremely difficult, if not impossible, to place a reliable valuation on any investable products underpinned by blockchain. When I say valuation, I'm talking about the price you pay to own the investment. Price is important because the value of any investment is determined by the price you pay. Pay too much and the value to you as an investor decreases. That being said, it will be silly to outright disregard Web 3.0 as a potential source of wealth in your infrastructure. What's critical is educating yourself on the 3.0 ecosystem so that you can identify new ideas and projects which have the potential to add significant, meaningful, and lasting value. As Gary Vaynerchuk notes, 99% of NFT projects will likely fail in the short term, but what matters is the 30 and 40 year outlook. Because our millionaire conversation has a long-term horizon in mind, that would suggest that Web 3.0 is a very viable candidate for inclusion in our infrastructure. Again, the real value of Web 3.0 won't come in the short term, but rather over many decades and via many iterations of ideas and innovations. Keep an open mind, but equally proceed with caution. Number 6. Entrepreneurship. Up until this point in the video, we've talked about allocating your money towards investable products like stocks, ETFs, REITs, crypto, NFTs, etc. Investing is a very important part of building up your infrastructure of wealth. However, the next two sources we're going to discuss are arguably the most important and the most valuable. Because of that, they're also the hardest to build. First up is general entrepreneurship. Real wealth comes from starting, building, and scaling value-adding businesses. Are you able to take an idea that you're passionate about, execute on its production, and deliver it to as many people as possible globally? Entrepreneurship allows for both wealth of wallet and wealth of mind. In the words of Vizzy Andre, everyone needs a skill that raises their value or a project that improves the world. When you start building something that can stand on its own, you start to see your capacity for being functional. The benefits of entrepreneurship go far beyond money. There's freedom, self-validation, and meaning, to name just a few. I fundamentally believe that anyone can be successful as an entrepreneur. Building value-adding businesses around your passions is both a highly rewarding and challenging experience. The difference that the entrepreneurship lens brings to your business, as opposed to being just a side hustle, is ambition. Being ambitious, believing that your ideas will not only generate income, but will also add meaningful value to the lives of people on a global scale. Having that kind of business is an extremely valuable source of wealth in your infrastructure. Make no mistake about it, entrepreneurship is not an easy path. There's lots of doubts, uncertainties, and risks which come with building a business. However, provided you have passion, resilience, and an ability to execute, as well as a laser focus on quality, it's not beyond the realm of reason to succeed as an entrepreneur. Number 7. The creator economy. The last thing I want to talk about today is the creator economy. We are living in a time where it's totally possible to make a living, and a very good one at that, from making content and posting it online. Content creators have been doing this for over a decade, but there's arguably never been a better time to get started than now. From my experience, the best way to build an audience online is to create meaningful, value-adding content consistently and to post that content across multiple multiple platforms. The creator economy is an infrastructure in its own right. Once you build your brand, you can then monetize that brand through advertisements, affiliate marketing, courses, webinars, tutorials, merchandise, and so much more. Think about how powerful that could be as an income stream in your infrastructure. The principles of compound interest, which we discussed earlier in the context of investing, equally apply here. In the early days of content creation, there's very little movement, but over time, as you start to find momentum, the growth becomes exponential. The creator economy is only going to keep getting bigger, especially with the advent of Web 3.0. We're seeing more and more companies hire talent who know how to make resonating content. This is a skill you need to have. If you genuinely believe that you can't build a following from your passion, please leave a comment down below and we'll chat about what you can do to get started. So that's 7 realistic ways to become a millionaire. We can take a step back and ask ourselves, how do we go about building these 7 sources in tandem? Personally, I would maximize my investments into retirement accounts to make the most of tax benefits and free money. Then, with any excess money I had left over for investment purposes, I'd allocate that across stocks, ETFs, REITs, and whatever else I wanted to invest in. For Web 3.0, I'd invest time in educating myself by listening to reliable sources and leaders in the space. Then, from an entrepreneurial perspective, I consider A, whether I have an idea that can be scaled into a global business, or B, how I can monetize my passions through the creator economy. The key is that all of these considerations are happening simultaneously in a bid to create an infrastructure which supports your journey to millionaire status. So I really do hope you enjoyed the video here today. As always, if you did enjoy the video, please do let me know in the comment section below. Leave a like on the video, subscribe to the channel, and I'll see you in the next one. Cheers.